Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again at the gold market. So in the gold market we actually have the concern about the upward retracement. And the major question that we have to ask right now is whether retracement reaction on a strong weekly support and universal area is coming to an end, or we still could get some upward continuation of a deeper retracement. Why we actually have this question is just because in general we have the bearish context on the weekly chart. It's really strong sell-off from the major resistance and suggests the deeper retracement to the downside, and that makes impact on the overall setup that we have on the lower time frames. So existing of the strong bearish momentum, bearish context tells that upward reaction, which is we treat as a retracement, could over in any moment. And this is not the trade that we would like to stick with a long time. This is not the trade that we would like to marry on. And we suggest taking the first result and just then certain chance to go short again with the major setup that we have. And as we said yesterday, on intraday charts, there are not really very good signs for bulls because market shows reaction on resistance, and it definitely shows the sign of some problems with the breaking the resistance. This is not the way how market usually, how the bullish market usually continues the upward action, and that makes us worry about the perspective of the upward action, and this makes us worry that maybe this retracement is coming to an end. So take a look on the daily chart. In general, this bounce shows the classical shape of the flag, which is a continuation pattern, or better to say even the wedge pattern that you could draw here. And it's matched to our bearish view. So we have the downward action. It's weekly charts I shown you yesterday. We have strong collapse that engulfed 1, 2, 3, 4, 5 weeks in a row. This whole month you stand inside of this week that has happened 2 bars ago. And that reaction is mostly just technical pause in the downward action. So this momentum definitely should have the downward continuation, should have the continuation. And that's the reason why we still suggest that confidence support probably could be broken. And our trade right now is just in a minor pullback. We take this trade because the weekly time frame is too much for us. We're taking the too long, we're taking the short position directly. But on a daily chart, that retracement is suitable for trading, and we could spend some time in the trading it's long. But currently, we see too much signs that tells us maybe it makes sense to stop this trade and just book the result. So take a look on the 4-hour time frame chart. On the 4-hour time frame chart, we will try to calculate the swings. So yesterday we already have done this. Just to remind you, we have the first extension up from the support area. This is definitely extension mode, upward action. Once the first stage is over, market turns to the major retracement, takes the shape of ABCD pattern, and that's the second point where I discussed the taking the long position. That was great. Market turned up again, and this turning was really fast in this fast action, some thrusting acceleration. But take a look what has happened next. Once market has met again the confidence, it turns to the retracement. But the major retracement already is done. And in this moment we said, well, it is possible, but let's be sure that market will show just minor pullback and will not erase the whole rally. That has happened. So just the 618 support, market has held and then turns up again. But take a look, this is another stop. It seems that already market has passed through the confidence, but suddenly it stopped again and started dropping. This price action, this behavior is not really very good for a market when it stands in an extension in the CD leg, and it can't quite hit the OP finally. It's struggling, but it can't reach it. And that price action makes me worry that market indeed could turn down. And that is the wedge pattern that we talked about. So you could clearly draw it here on the 4-hour time frame chart. This is rising wedge, which potentially is a bearish pattern. So we have this 1, 2, 3, 4 in the fifth wave inside of the chain on this wedge pattern. So that's the reason why I think so. Particularly speaking, I'm not really satisfied with the way how market is challenging this resistance. So I don't like it. Besides, guys, here we've got bearish divergence on the 4-hour time frame chart. So what we could do in the current circumstances? Take a look at the hourly chart. On the hourly chart we have this upward channel. And in general, our long entries here and here, maybe somebody even have taken position here, are not really bad, because market keeps supports very nice. But now it's time to tight stop right to your position. I mean, protect it with the tight stop order. And I think that good stop for long positions if you have taken here and here below the confluence. So this will provide you definitely some profit, and at the same time you will not place the stop somewhere in the just occasional area. So that's really important level. So take a look. This is trend line support, this is confidence support, and if market will break it down, it will definitely tell you that upward rally, upward retracement based on the setup on the weekly chart is over. Market is turning down. If you have taken position here, well, you probably could place your stop on the break even. Finally, here also, guys, final moment that I would like to say, we could recognize a hand shoulder pattern is forming. So this could be left shoulder, head stands 127 to the shoulder, and market wasn't able to reach the upper bottom. So complete this ABCD pattern. That's it. You can see market wasn't able to return it back up to the previous stops and start dropping here again. That could be hand shoulders, which could mean that's definitely, as you understand, stands contradictory to the overall idea of the ABCD pattern. And that's the thing that we should keep an eye on. We just can't ignore it. This is the reason why I call you for protection of your profit. If I will be wrong, and that will be great, because in this case this confidence will survive, our stops will be intact, and market will just continue move high to the OP or 1488 target. Placing stops somewhere below these lows, below this confidence, will not become the barrier for this trade, for keeping longs position in general. And this is really absolutely the step that we could do without any negative consequences for us. So that's what some things that I think you have to think about and consider in the current trading on the gold market.